Okay, Wasuna, Friday the 19th, index futures in the US had a pretty sharp move in the morning, consolidated, and a sharp move in the afternoon. All in all, great move in the morning, good trade setups available in the morning and some in the later parts of the day. These days like this, you have to take advantage of these days because days like this will make your P&L, the differences between your monthly P&Ls, being very, very nice or just average. So you have to take advantage of days like this because especially there are clues that you can pick up that we will have moves like this. Now, I did get emails. Rob got a lot of emails as well, and so did Derry. And clients telling us how well they did today. We always enjoy hearing from them. So you guys feel free to send us those type of emails anytime. We just don't want to hear about negative stuff. So we like to hear about the positive stuff. Just don't be timid about sending those in. Send us in. We really do enjoy them, and of course, as always, they're kept confidential. Those kind of email conversations we never share with anybody else. Anyways, let's move on. My objective for this video is to go over how I put everything together and what I do in the evenings and how I transfer that into the actual open and resuming the entire trading day. I'll go a little bit fast so I can fit everything in. Those of you who know me for some time, you know that I put a huge emphasis on market bias, market trend, and trend bias because you get those right. The rest is fairly simple. The rest is pretty much timing. So get the magnitude, get the trend and the magnitude correct, and you do really nicely. That's pretty much trading in my book. So start with ES, and I always look at ES, NQ, and YM for the US index futures. You can look at TF and EMD if you'd like. Now, what I'm looking at, I'm doing a quick scan. I'm not doing a really thorough price profile analysis because there's a lot you can do with this, but mainly I'm looking at how we closed. Okay, so it's the prior day. I'm seeing ES, basically values lower. We have a narrow profile. To me, this is just consolidation. This is just bracketing. Not a lot of interest here to push prices higher, and obviously values lower. That's weakness to me. Now we can push down and bounce right back up, but this is weakness so far. We couldn't make higher value. Now that's simple. Okay, you can take it a lot deeper than that. For the purpose of this video, we'll just keep it simple. I'd like to have seen YM weaker as well, but as you can see, it's not compared to the prior value area. But again, a short, narrow profile. Okay, with with NQ, it's sort of between what ES is doing and what YM is doing. I would have liked to see NQ a little bit weaker. The prior night, I would have liked to see it a little bit weaker. Now, meaning the prior night when I was doing my analysis, but that's how it is. That's what we get. So that's my I look at price profile. Next thing I look at, if I'm looking for reversals, if I'm looking for areas that we're gonna have potential reversals, I look at higher intervals. I start with the higher interval zones. If I see any attractive areas that I see that are going to be resistance, then I'm going to focus on those areas. And this is a 15-minute chart. As you can see, we have this zone here. It was tested the next day. It was rejected down. I wanted to see it that same day. I was looking to see if we could test it again during the regular trading hours, and we didn't. Would have loved to have seen that rejected once more, but just my rule of thumb, when it's rejected, when a zone is rejected, it has a weight of 2 for me. When it's just a zone that hasn't been tested yet, it has a weight of 1, especially zones that are at tops and bottoms. These are the intervals you can use if you're new to this type of zones. Once you get used to it, then you have free reign. So now I know an area that I need to focus on for reversals. And you don't get this type of volatility. You get this type of volatility for several reasons. Most of the times it's due to reversals. Reversals make you the most money because they have the most volatility. Um, Now, of course, news items, breaking news, things like that will generate this kind of volatility too, but generally, reversals will give you this kind of move. Now, remember, the objective is how to put everything together for this video and also to be able to foresee days like today. Okay, so we went over price profile, went over the zones. My next thing is to do a little bit more trend analysis, and I'm going to squeeze this chart, okay, and move back. Notice that we're going green, dark green, red, green, so it's not a solid, strong trend, and then green and then dark green. Okay, the way you can interpret that is weakness, strength, a little bit of weakness, weakness again. When you see that kind of price action, market's doesn't have a lot of breadth in it, doesn't have a lot of conviction in its up move. This is, we're looking at the STI2, which is longer term trend. Okay, this morning, first bar, we get almost a reversal. If this was red color instead of dark red, that would have been a 100% reversal. In my book, based on the market preparation that I just went over with, for me, I made the discretion. I can make the discretionary judgment that this is, put as much weight on this as if it were a bright red color reversal. So I've given you that background of how I interpret what's going on in the market. All of that is so I can understand what happens as soon as the opening occurs. Now, price opens, we go right into, and I have this zone on the 1 minute chart as well, the same zone we looked at on the 15-minute chart. So you can see it's on the 1 minute chart anyways, but you could always move those zones on your interval that you're trading if you want to see, or keep a separate chart. Now on the 1 minute chart, again, it was tested, rejected hard, and we never tested it the next day. When zones like that usually are like magnets, they'll pull price up, especially if we're going to move out of that area. The next day we didn't even come close to it, except in the morning, and that's the zone of the 15-minute chart, not the 1 minute. We open up, we go right into that zone, and what happens, if we're going to take off, we wouldn't have looked back. Within 2-3 minutes we would have taken off. That's where we gap up right into resistance. We confidently sell off. So look at a price profile. We open, sell off, open, sell off. Same thing on NQ, open, sell off. This is a strong, confident open. Participants were not wondering what they should do. They knew exactly what they wanted to do. They just sold at the open. So with all this context, and okay, since I clicked on it, and you can see volume breadth is weak. Whenever volume breadth opens up high and drops within a matter of 1 hour into the opposite extreme, take that as a big sign of weakness. Okay, so the next part is drilling down. I see the confident opening, my indicators. Here's the SDI, SDI2, delta trend gets red. That's the first short right there. And the rest is pretty much, as you can see, delta trend is red, SDI, SDI2, everything is all three indicators are giving you green light to short. Those of you that are familiar with these indicators, you know exactly when you short with these and when you don't. So you have confluence across all three indicators giving you confidence to go ahead and short. Now we took approximately 10 trades, 1 loss, 9 win. The 1 loss was by 1 tick here. Okay, I'll take 1 loss and 9 wins any day. And of course, this trade here in the morning, you could have boxed this SR zone and traded it either way that we break out of it. Now, of course, I wouldn't have traded it long into this resistance zone because I'm not going to go long into a zone of resistance. So there was just one trade to go short as a breakout of that bar. Now, these trades here are all based on strategies that we teach and we offer. Excuse me. So, and this video is more about giving you market preparation than going over into the timing and strategies of a particular trade. But as I said earlier, get the trend right, get the market bias right, understand price action and what its habits and what it's doing, and have some solid tools, and your timing is pretty much the easiest part of it. Now on another video we can discuss more thoroughly timing, but just not enough time on this video. Enjoy your weekend, guys.